Hello, everyone. It is Wednesday, February 27th. My name is Liam McMahon. I'm a currency strategist over at GlobalFxClub.com, and I'm here today to talk to you about Pound Kiwi. We're going to look at the daily chart and then the 4-hour chart and talk about some potential for this pair. It's been extraordinarily weak of late as the pound has been one of the worst performing currencies, and the New Zealand dollar or the Kiwi has been one of the best, driving that cross pair significantly lower over the last 4 or so months. So we're going to take a look at that, and we're going to debate whether or not we should be looking to trade the trend or look for a reversal. So if you would please take a moment to pause the recording and read our risk disclaimer, which should now be on your screen. We will then get started. Alright, so here we have the daily chart of Pound Kiwi. Obviously, as you can see, since we cleared these 189.90 or so lows here and here, retested them here, it's been pretty remarkable fall. We fell basically 1,000 pips from the 11th of February until the 28th of February. So a 17-day, 1,000 pip drop, not bad. Since then, we sort of broke out of this consolidation. We put in what could be a major bullish reversal candle here off the rejection of 180 as we headed much lower and then spent the rest of the day shooting straight up to fill a gap, and then we've continued higher since then. In terms of resistance, we obviously have major trend resistance, which comes in right now at 186.18. In a few days, this area right here, if we get there around the same time, 180, basically 185. Here we have this congestion horizontal area, which could serve as resistance, and if we time it right, we could also get the trend line. That will be our first major test in terms of resistance. Pound Kiwi, if you notice and look, pays a lot of attention to horizontal levels and less so to trend levels. So you always want to keep an eye on the horizontal levels where price stalled. So here and then back up here at this 189.50 or so figure. And of course, if we tick back, you can see there are some more horizontal levels that you should be keeping an eye on. But first and foremost is this 185 figure. Above there seems to really open up the potential for some more upside as we start to clear some levels and recover a little bit. That is our first major resistance. If you're looking to trade the trend, which is obviously down, having moved from 197 to 180 in really only not even 2 full months. Clearly a downtrend, but this is a warning sign. This candle here back on the 25th of this month, a couple days ago. So definitely sort of keep an eye on that, but certainly this 185 figure is huge. Now, if you're looking for the potential for a reversal, your best chance really comes on here, this 4-hour chart. Right now, again, here you can see this 85. This trend line also coincides nicely with the 200 period EMA on a 4-hour chart. So that adds another level of resistance and would certainly enhance the bullish case if we manage to close above it. Now, your best chance again for a reversal probably forming here on this 4-hour chart. If we can complete some sort of right shoulder, this resistance area that we're currently testing becomes a neckline of sorts for an inverse head and shoulders bottoming pattern. Now, in terms of the measured move for the bottoming pattern, it's not an overly large pattern right now. We're really only looking, should we clear that neckline, the move is not that significant distance-wise, but what is significant is that it takes us over this First, it would take us over the 100 period EMA on the 4-hour chart. We're already above the 50, and then the move would take us over that trend line and over that 200 period EMA, and also it would clear 85. So certainly, if that inverse head and shoulders situation did play out, which we had not even completed our right shoulder yet, so this is only one potential out of many. That would certainly bolster the case that this is a near-term bottom, and we could see a move up to 192.50. As really most likely it'll be the Kiwi unwinding and the pound stagnating. There are some fundamental drivers that would back this sort of bullish case. We've had warnings from the RBNZ that the Kiwi is too high, and then rumors that they've been intervening subtly in the exchange rate. Certainly, if they decide to become more aggressive in talking down the Kiwi, or even actively intervening to weaken the currency, we can see a major Kiwi unwind across the board. The poor export numbers that came out of New Zealand yesterday gives the RBNZ a perfect reason to intervene and weaken the currency if that's what they decide to do. The pound has already been beat up about as much as it can be beat up until Carney starts in July. Certainly, I'm longer term very bearish the pound as their economy is in bad shape, and it looks like there's a lot more quantitative easing to come out of there. But certainly, we could see some sort of relief rally in pound crosses, really across the board. If only just because of just how beaten down the pair has been. Certainly a squeeze higher would help shake out some weak shorts and let the market reset itself. And in doing so, it may send pound crosses like Kiwi and Aussie higher, especially if we get a corresponding move weaker in essentially Kiwi dollar, Kiwi yen. So that is what we're keeping an eye on here for pound Kiwi. Whatever your bias, there's a great setup for you on this pair. If you want to keep trading this very aggressive, very proven trend, certainly you want to keep an eye out here on 85 and then this trend line. If, on the other hand, you want to try to play a reversal, maybe take 1,000 pips or 800 or so pips higher here. I would keep an eye on the potential for this to form an inverse head and shoulders. Certainly, a move back below 80 exposes infinite more downside. But as long as we create and chop around here for a while, the more likely the inverse head and shoulders scenario starts to look. A quick spike higher, on the other hand, before this right shoulder is given a chance to form, sort of weakens the pattern. So definitely keep an eye on pound Kiwi through the end of the week. If you're in the reversal camp, you really just want to see some consolidation here, really until the first of the month. And then the first of the month, a break higher, some seasonality might be worth looking into. All right, so if you have any questions, please hop on over to GlobalFxClub.com. We'll be happy to answer any questions that you may have. Good luck trading the rest of this week, and I will talk to you guys soon.